Hi everyone, welcome to Ask the Expert, an award-winning daily series which runs from 8:30 to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community on Facebook. Accountants and business experts are on hand 24/7. During this live session, we'll be running a poll, so please do engage with it and we'll reveal the results at the end. It's very nice to be back again on Ask the Expert. My name is Glenn Collins. I'm a qualified accountant. I head up Technical Policy and Strategic Engagement at ACCA. That's the Association for Chartered Certified Accountants. ACCA is a global professional accountancy and tax body, and many of you will have accountants who have studied and who are regulated by ACCA. So look out for ACCA or FCCA. In this session, we're going to look at perhaps one of the areas which is topical at the moment. It covers both accounting and touches on tax for government grants. And many of you will be preparing accounts which include those grants that we received through last year. Many of you will also be preparing tax returns and looking at how they're incorporated in there, how those grants are reported. Some of this is very straightforward and some of it gets a little bit more complicated. If you're finding you're spending too much time on this, do speak to your accountants, do speak to your advisors, and they'll be helping a few business like yours navigate this area. So, don't get too bogged down in it, but just be aware that there's a little bit of detail and complication around this. So I'm going to go into a tiny bit of that detail, but not overburden everyone with some of those rules. But under FRS 102 and FRS 105, so they're the accounting rules for preparing accounts, an entity can't recognise government grants in its financial statements unless there is reasonable assurance that an entity will have complied with the conditions for them and the grants will be received. Once that recognition criteria has been met, then the entity can apply that accounting policy to the grant and recognise that grant. There is actually a choice under FRS 102. So you can choose something called the performance model, or you can choose something called the accrual model. Both of these exist under FRS 102 and can be used by a company, used by an entity running forward. For micro entities, those of you who choose to report under FRS 105, it's only the accrual model that can be used. But now, a bit of good news. We've said there is a choice there, but actually the vast majority of the grants we're talking about, which will have been received under COVID-19, they will be treated in the same way, regardless of whether they've been under the performance model or the accruals model. So that is, the grants are recognised immediately as they've been received in the profit and loss account. So let's look at this a little bit further. So grants such as CJRS, so that's the job support grants, when they're received in the financial statement, it's a very straightforward debit cash at bank, credit sundry income, grants received. For rent, so a lot of people will have had rent deferments or grants received for rent or other rent concessions running through. They're actually recognised in the period that the benefit from the concession is received, and not, as is the case with leases, normally spread over the term of the lease. And that's been really useful. That was we had reached that conclusion in the early part of the year, and we're very pleased that there were amendments made to the accounting standards to actually recognise that and say that's the right treatment going through. So those grants and actually the rent, they're both recognised as actually they're received, as actually they've been granted going through. So fairly straightforward, but as with all these things, can be a little bit complicated with some of the maths. Now, an area where there is a slightly different treatment which comes through is under CBILS or bounce back loans. And the biggest impact here is when you perhaps opted to pay as you grow. And I'll just cover that in a few minutes, just a recap on pay as you grow. I know I've covered that in a previous session for RC experts. So accounting here is actually around the interest charged on the related government grant, which is recognised in the profit and loss account. It is more difficult, as you won't have received the money, the bank hasn't charged you, the government has actually paid the interest. So it is a calculation that needs to be made on the deemed interest during the period and actually how that is rolled out over the term of the loan. So as many of you will have experienced, you will have loans which cover a different year to your accounting period. So i.e., government gave 12 months interest-free credit on the loans. So that amount is likely not to be the same as your accounting period. So there's a calculation which goes through, and then you have to calculate some of that going through, which applies across in your particular year. I mentioned pay as you grow, and you may remember, or you may not have been on the previous session, but just to recap on that, many people will have received bounce back loans or CBILS running through from May 2020. They were introduced to help smaller business impacted by coronavirus, and they were to assist businesses to borrow between 2,000 and up to 25% of business turnover, for maximum 50,000. So on the bounce back loans, they closed in 31st of March 2021, but we have a period where they are due for repayment 1 year after they were issued. So if you imagine from when they were launched in May 2020, the first repayments of those loans are starting to fall due from May 21 onwards. And lenders have started to communicate out around pay as you grow and the pay as you grow options. So these will be how those loans are repaid. Now, lenders have been informing their customers, all of you and your businesses, if you took them, that you have a number of different options. So there's an amount of flexibility that is actually built in there. So a payment, an option to delay repayments for a further 6 months, meaning businesses can choose to make no payments on their loans up to 18 months after they originally took the loans out. There's potential to extend loans from 6 to 10 years at a fixed rate interest of 2.5%. There are some interesting elements also built into pay as you grow, where you can make interest only payments for 6 months with the option to use this 3 times during the term of the loan, and a request to pay a 6-month repayment holiday once during the term of the loan. So as mentioned, this, as you can imagine, does act as a little bit more complex in some of the accounting treatment running through and the interest calculation. But an important aspect is for you, for your businesses, actually a great concession pay as you grow. And it is worthwhile sitting down and working out how that will impact your cash flow and how that will impact on your business running through and how you want to involve that in your planning. And actually also with those really valuable concessions, particularly the 6-month repayment holiday, and particularly the chance to make interest-only payments for 6 months 3 times during a term of a loan. They're really great concessions and ones that you wouldn't want to use lightly. For example, if another lockdown was unfortunately to occur, you might want to activate a 6-month repayment holiday. So really great concessions running through, but something to really consider as part of your planning. Anyway, back to some of the accounting and tax treatment. Now, on the tax returns don't actually follow some of the accounting treatment running through, but HMRC have actually updated the personal and corporate tax returns so that they require entries for some of those major grants. So within the tax returns, we've got SAYS, CJRS, and JSS running through, so the major grants. take care when looking at those, because they are where HMRC has information that would be included on those returns for applications. So HMRC have actually, within those tax returns, put in the grants they know. And as we know, there are many other grants that actually exist out there from local authorities and from others that are not picked up within these particular sections. But we'll come to that in a second. So for self-employed, what we have is a new entry within the tax return. So for the short tax return, that comes into something called box 27.1, and that actually is the self-employed income support grant declaration going through. So that actually fits within there. So it's worthwhile making sure that that is pulled out and pushed in. For the self-assessment full return, the new box is 70.1, and that has a similar requirement running through, and that also requires the self-employment income support grant to be declared. Other non-SAYS grants running through actually end up going into box 10 of the short return, or box 16 actually if you use the full return. So there's a split treatment running through there for an awful lot of those grants. So it is worthwhile just making sure you've got a list of those, you've identified those separately within your accounts. I know if you're using QuickBooks software, you'll be able to do that and identify those running through and those particular grants that you can pull out with ease. But don't forget, there are some separate calculations running through, and it might be worthwhile just having a quick check with your advisor. The corporation tax return, that's also been included, and that's spread around a bit. So we've got a new declaration area that actually fits in, and that's the coronavirus support schemes, which deals with CJRS and JSS, has an amount received and an amount people are entitled to, and then actually overpayments, because what it's trying to do is work out where you actually entitled to those. Did you receive them in a correct way during the year? So that's actually dealt with, as we said earlier, on that recognition criteria. And did you get a grant through? Was it paid to you? And actually, were you entitled to it? So this is a way of pulling that out within the tax return. There are a few other boxes where perhaps some of those differences come through. Should they exist? In most cases they won't, but if they do exist, then they're box 525, and that's around an overpayment due, and 526. So that's some of the tax return areas running through which actually sit there as well. But it is well worth spending a little bit of time and working out on some of that criteria and what's actually needed. So happy to move over to questions and look at a number of the questions running through. I don't know whether anyone's got any particular questions they'd like to ask. So we've got Reese. So in July, we'll be able to apply for the 5th round of SAYS. Are there any changes to the eligibility we should be aware of, or considerations but we should make before applying? I mean, in terms of that grant running through, obviously HMRC have picked up on all of the relevant information that they hold on you for the grant. There are important conditions running through, and there are always subtle changes to the wording, and that looks at the effect on your business and the demonstrating of that effect. I would say to anyone looking at those SAYS grants, do make sure you keep records of how your business has been affected and impacted running through. For most cases, that should be really fairly easy and straightforward, but do take care on that, in that there's a record keeping requirement which runs through there, and there are subtle changes to the wording, and it does look at how your business has been affected and impacted, and that means profits. Earlier grants, we had many people who'd gone out and actually repurposed some of their business, and actually they had done that and they had re-increased some of their earnings up. But at the time they received the grant, they were actually in that negative profit scenario. So do look and do work out how actually some of that business has been repurposed. Keep decent records would be my suggestion running through that. So we've also got Tasha is, how should we be planning for the end of furlough? I know it keep getting pushed back, but I'm very worried that once it doesn't happen, I'll have to let a lot of staff go. I mean, that is a real common concern, and we're seeing that come through in an awful lot of businesses. You're not alone there, Tasha, on that. The changes coming through, obviously on furlough, and with the additional contribution coming through from employers, is also considerable. Obviously, that run through to September now, where we're seeing employers contributing that difference between the 70% from the government grant and the 80% payable to employees will be significant, and that's, unfortunately many businesses will be looking at those harsh decisions as actually how many people can I keep financing. A lot of businesses have, as you all know, because you just have to look out there in some of the recruitment areas, and we see a lot of that coming back to us at the moment, and that is, people are finding it very hard to recruit, particularly in areas around tourism, hospitality, but also across areas such as construction, in my own field, in some of the accountancy practices running through. Actually, there are many job opportunities running through. So it is really hard, as you're obviously experiencing, Tasha, in how long do I keep people on until there's an upturn in my particular business, and I can take advantage of that opportunity. So Shannon has said we've taken a few of the government grants and we'll probably take more if they're offered. That being said, we're a bit worried about how we're going to repay all of these. When do we need to start worrying about these, and what are our options? As we mentioned earlier, that there are some of those which fit into loans, and those loans are repayable, and pay as you grow actually sits within that. That is, if you took bounce back, if you took on receivables, then you can talk to your lender and talk to them about pay as you grow, and look at that deferral period running through. Other grants are not repayable. So particularly some of the local authority and some of the rate grants. There are also other grants that are available, such as Help to Grow. They are not repayable grants. Therefore, for a business to take and use and meet those conditions running through. But those that are repayable, generally there's been a mechanism there, such as Pay as you Grow, which has looked to say, okay, this might need to be spread over time. What I would do is, ahead of the lender making any approach to you, go ahead and work out your some of your potential cash flows. I know that's really difficult, bearing in mind we don't know whether we're going to have a further lockdown or further delays running through, but actually work out those case scenarios and say, actually, how do I need to fit this into my planning, and make sure you go ahead and you're in control of some of that case. As I said, Pay as you Grow, some of the extensions there are really useful. Some of the holidays are also really useful. And on the last session when we talked about this, we said don't fritter away some of those concessions. So we mentioned the the interest delay, the interest only payment, the chance to actually delay any take a repayment holiday running through. Those are really valuable concessions running through that you'd want to say, okay, what do I want to use? What do I want to keep in my back pocket? Which could be really valuable to my business and its cash flow running through. But my message to you would be, go do some planning around some of that cash flow to make sure that is in place. Spend a little bit of time. I know it's not the most interesting job, but it is worth, and it pays dividends. And if you want, speak to your advisor around that. The advisors will be going through, and many accountants are going through a lot of those planning exercises with their teams now. And there's a lot of software that can also help you. So just moving on. So we've got can rent deferral schemes continue for the first year of recovery, or is that up to individual landlords? I think if we're looking at some of those rent deferral schemes, some of them were launched by local authorities, some were actually put in place by landlords. We've seen some of the moratoriums running through. Some of those are actually coming to some of those concessions running through. Some of those are actually coming to an end now, and you will generally find there will be a lot of landlords who will be looking and going, actually, what are the occupier options available? And so, again, it is, as with the repayment of the loans, it's worth getting in and having those discussions early, and just saying, okay, what are we going to do? Because you're both in a scenario. The landlord hasn't had income coming through, and actually, you haven't had income coming through, or you've had a much reduced business, and you're looking at some of those holidays. Worthwhile discussing and saying, look, there are schemes out here. Can we mirror some of those schemes? Can we look at how we do this in a more effective way? Because that will be down to a good piece of bargaining, and work it out within your plans. Don't spend too much of your cash going through. So work out what is affordable. Work out actually how you can also take advantage of some of the business opportunities and some of the growth opportunities as we open up in some of that business area. So Phil has said, on your account, do you declare the government grants such as SAYS as income or something else? Yeah, I mean, put them down in your accounts as another form of income coming through. There is a line where you can put them in. You can disclose them as government grants. You could put in a descriptor if you wished. They will come through in that manner. So recognise those in there, but actually then don't forget to make those adjustments when you're coming through and dealing with them in your tax return. So actually they're picked up in a number of different places. So I think a really, just make it clear what you've actually had coming through. Reason for actually putting those into some of the accounts is actually if you're looking forward with some of your credit checks and other work with suppliers, useful to have that income coming through in there. Also, if you're looking at mortgages, useful to have some of that income as well in there. Although a lot of the mortgage advisors will be asking at the moment, what did you receive in terms of government grants in respect of your business, and how long will that continue, and what are your plans going forward to transfer your business and alter that going forward. So we've got, bear with me a second. So I have, how do we log into business rate relief, or how do we log business rate reliefs into our accounts? The reliefs coming through on those will be not spread. So you've actually been given an amount which has been in effect paid by somebody else, paid by a local authority running through. So as we were talking, that is a grant element there. So there was a liability, but that has been expunged, removed by that relief. So you recognise that that cost going through, but you also then recognise the grant that has actually been there. There will be a we'll make sure there's the guide that we've got is actually posted in the chat afterwards. That's an ACCA guide that we've prepared for a lot of our accountants, and we always share more generally. They're available across to anyone, because we have a very much an open website for all of that type of material. But do have a quick chat through with your accountant on that. Ash, that's it's a fairly simple calculation, but they'll be able to do that and assist you going through. And we've got a poll question, and I promised you a quick poll question at the towards the end. And did your business receive any government support schemes, grants, or loans running through? And the actual answer to that was 75% of you said yes, 25% of you were no. I'm actually partly shocked by that. I thought it would be higher for many, because there were many types of grants available, and some of those still are. So there are quite a number of local authorities which still have a considerable amount of grants that they haven't yet pushed out. So, but great if your business has managed to flourish and you haven't had to take any of that support or the loans that are on offer. I think that's well done. That's really amazing. So just from me, just want to say thank you very much for tuning in. If you want to contact ACCA, you can have a look on our website, acccaglobal.com. The next Ask the Expert is tomorrow, and we've got Ketan Malkawi, and that's founder and CEO of Enterprise Lab, and they're going to be talking. So tune in to actually get advice on navigating the change to as a business owner, on leadership, and on other areas. So it's all about navigating the change and sharing some of those important areas that help you be an effective leader. Don't forget the Be Your Own Boss competition on TikTok. You can pitch a new business idea and you could win investment, mentorship, and business advice. And also, the investment has gone up and is now staying at £10,000, and that's thanks to Go Cardless of adding more into the pot from the Purposeful project. So do have a look. Hashtag Be Your Own Boss to enter. I've really enjoyed answering your questions. I hope you have a great day. My one final bit of advice running through would be, don't get too tied down. You're all business people. You can look and navigate a lot of these areas. They're important to navigate because you don't want to fall foul of some of the HMRC requirements. You want to get it right. You want to get it right because it might affect your future amount you can borrow. It might affect personal mortgages coming through. But actually, importantly, some of that deferral might be really great for you and your business in achieving its aims. Do take the opportunity to have a word with your advisor or accountant, and do use the QuickBooks advisors as well. As we said, many of those are ACCA, so look out for ACCA or FCCA on there, and they should be able to support you going through. But it's been a real pleasure, and thank you very much for those questions that you ask going through, and hope you have a successful rest of the week. Thank you very much.